So after trading for 6 years, I'm going to break down in this video, in this one video, exactly what I do, how I analyze the markets, how I enter trades. So it should be extremely valuable. So make sure you get a pen and a paper and write down, because I spent a lot of money on courses and a lot of time and experience on trading. I'm just going to give this away. It's very simple trading, and I'm going to show you in this video. So if you guys get value from it, all I ask is subscribing, commenting, helping me out. I'm going to try and help you out as best I can. So yeah, let's get into the video. Let me show you exactly what I do, and then I'll break down some examples of it. So I'll look for key support and resistance levels. So let me just draw this out here. And then when we get to these levels, I want to look for a trend change on the lower time frame. So this primarily happens on the 1 hour and 4 hour. So if the market's coming down, excuse my poor drawings, but once it comes down, I want to look for a trend change. So a breakout. We've broken out above this high. We've made a new higher high. And then we want to look for the pullback. And then we want to look to enter on this pullback once we've got confirmation to continue the trend up back to another key support resistance level. So that's what the lower time frames, the 1 hour and 4 hour time frames, tend to look like. But this means on the daily time frame, one candle or one daily prediction is a trend change. So let me try and explain that better. So each daily candle is made up of hourly candles and 4 hourly candles, and each move on the daily, the 1 hour has to move with that. So if I'm predicting the next move to be up on the daily time frame, I'm predicting a trend to form on the lower time frames, and then I'm just looking to, once I can predict, okay, this looks more likely to go up, I then can think, okay, how am I going to enter? I enter on the trend change. So let me show you some examples if we get some. So we're at January 2022. So I want to look for, I should probably say as well, I'm looking for overextended runs and trend trades. So on the daily, on the daily time frame, I'm looking for, if something's oversold like this, I'm looking for a move up. I'm looking to enter. If I'm at support resistance, I'm looking to enter here. When we're oversold, we've been going down, we're looking for a quick move up. They're pullback moves. Same if it was going up, if it was going up as well, like this. If something's really overbought, I'm looking for a sell-off. So they're the pullback moves, and this is the daily time frame, let's pretend. So I'm looking for a daily move down or a daily move up. Then I'm also looking for trend continuation moves. So if we have been trending on the daily like this, and then we break down, so it's the same as the hourly trend, but I'm predicting it on the. I'll explain. It is quite simple, but it's hard to explain. And then we pull back. I'm looking for the trend continuation move, so we'd be entering here. So it's the same as on the daily, on the 1 hour and 4 hour, but you're getting the higher time frame thesis first, and then you're entering on the lower time frame. So let me show you an example. So we're looking for an overextended move. So this is January 2022. So we're looking for entries, either a trend continuation move or a daily, or the daily that's overextended. So we've broken out. This isn't massively overextended, but it could be argued that we are overextended. So now we've had a bearish engulfing. So something like this would be quite nice, where we've been consolidating, we broke out the range, so we are bullish. We are in an upward trend now because we've broken out. However, I'm looking for the next day to be bearish. And why? Because we've broken out. We've had 1, 2, 3 solid days. This candle slowed down. And now with this bearish engulfing candle, all I'm looking for now, so this would be 10 o'clock. This would be 10 o'clock. The candle closed 10 o'clock on a Monday, or on whatever day it is. And then the next day, you're going to wake up and predict that the next day is going to go down. So I'd scale into that 1 hour time frame. And as you can see, we've broken out. We've been in an upward trend. Higher highs, higher lows. We've broken out. from these areas. So now we're looking for so this is, the trend has changed on this lower time frame, which gives us confirmation that the next day is going to be bearish. And then we pull back, see if we pull back to okay, we're pulled back to this area now, to the 1 hour 50 EMA. If we get some bearish engulfing or bearish candle, okay, that would do. We would then enter, we'd put stops just above these highs, and we would target the next key level, so round about here. And let's see if this plays out. Yeah, we did. So that would mean that this daily candle went down, yes. So as you can see, we predicted the next candle to be bearish, and it was, and we went down. So I'm not sure, I hope you guys are understanding this. So yeah, we're looking for daily directional predictions. Once we're overextended, once we've found an area we want to do business, we want to sell or buy, we then want to predict the next daily move. And if we can predict that direction, all we have to do is be able to enter the market and capture that move. If you can accurately predict if something's going to go up or down, it's just then capturing it. So let's see if we get any other examples. Something like this. Again, you can see we're overextended. Let's play this out first, then I'll look for the entry as well. So the prediction would be up. We've gone down, we're overextended. We've had 1, 2, 3, we had a bit of consolidation, but we've had a massively overextended run to the downside. We're quite far away from the 50 EMA, which is the average point. So we're looking for it to go up. So we're looking for a black candle. We're looking for it to be a positive day. Okay, it was. Now, could we have captured that move? So if we go back to the hourly, let's see if we could have captured this move. So we're looking for a trend change now on this time frame, because we're still bearish. We've broken out of this high. So we've made a new higher high. We've been going down. Lower lows, lower highs, which is a downward trend. We've now broken out of this, making a higher high. So now we're looking for the higher low. See if we pull back. We're not really pulling back. So this is what you have to be able to deal with as well. Sometimes you'll predict the direction, sometimes you'll predict what's going to happen, but there's just no entry. If this had pulled back a little bit further here and we got this type of price action, we could have entered, but there's no way we could have entered here because the risk reward would have been messed up. So let's do one more, just so you guys sort of get an understanding. Again, we're looking for, okay, we're back up at this area. We sold off from this area before. We've been going up for 1, 2, 3, 4, 5 days. We had a bit of a wick into this area. This candle slowed down. We've had a bearish candle. Are we going to get the continuation down now? We're at a support level. Are we going to get a sell-off? And that's all predicting. So this would be the 10 o'clock candle close. And I'd sit there and go, okay, we're in an area. We're overextended. I'm predicting the next day to go short. So let's see if it would happen. Then we'll look for the entry again. Okay, we did have a bearish candle after that, so our prediction would be right. Now let's see if we would be able to have an entry. Let's see if we got an entry into this. And how would our entries work? Well, we want to look for a trend change now, because a trend change is what dictates that next daily candle's movement. So we're in an upward trend, higher highs, higher lows. The way we would determine this to be a failed trend or a trend change is a breakout of this 50 EMA and break down these lows. So let's see if we break down. Yeah, we're broken down. Could potentially be an entry here. Then we've had the bearish candles, a bearish pin bar, and a bearish, not a bearish engulfing, but we can see that the bearish momentum starting to come in. And the target would either be down here, or you could target those lows. But let's see. Okay, that one would have stopped us out. So that's another thing as well. Just because you can predict the direction, we had a downward day, doesn't necessarily mean you're going to capture the move. You could get in, you could predict the right direction, but get stopped out before it goes with you. So that one would have lost. But it's all risk reward. Look at the reward on that. That was 3.7%. So let's see if we can get, we'll try and do one more. Something like this. If we, now we're over, okay, this is very overextended, as you can see. So this is a textbook setup. We're overextended massively from the 50 EMA. We've come back to a level. Are we at a resistance or support level? So yeah, we are at these lows which it bounced from before. It's quite a nice area. So what would we be predicting? We're predicting to go up. So let's see if that happened. Yes, it did. So let's see if we would have got an entry. Again, how does our entries work? A trend change on this. We're looking for it to be a bullish day. So we're looking for this trend, a downward trend. As you can see, lower lows, lower highs. Lower lows, lower highs. For it to break out, retest, continuation. So let's see. We've sort of broken out here. So let's see if we get any momentum come in. We have some momentum here. Oh, long. So we'd enter along here on that bullish candle. Stops just at these lows, and we'd target the highs. You could target those highs, but you can manage it along the way. Okay, we have gone up. So we've predicted the move. We've been able to enter on the move. Still in the trade just about. Okay. Still in the trade. Is this going to play out a bit longer? Sometimes they happen quite quick, sometimes they don't. Okay, we could even look to close it, but now we're back at this high because we kept rejecting this high. But yeah, you can work on your entries, your exits, where you would target for yourself. But I'm just breaking down what I do. So yeah, similar to that really. You're looking for, I'll go over it one more time. You're looking for the daily time frame to be overextended or overextended either to the downside or to the upside. Like this, it's overextended. We're looking for the continuation to the upside, or you're looking to capture the trend on the daily time frame. And then you're looking to predict the next day's move. Once you predict the next day's move, you want to enter. If you can predict the next day's move that's going to go down and you're right, is how we're going to enter and how we're going to capitalize on that. And we capitalize on that based on a trend change. That's how I do it. I look for the trend to change, for the momentum to switch, and then enter on the pullbacks. So yeah, if you guys like this video, get value from this video, we're road to 1,000 subscribers. I'd appreciate anyone liking, sharing, commenting. Obviously, I spent quite a bit of money on courses and education and a lot of experience, a lot of time on the charts to learn this information. And so I'm just giving it out because I want to help as many people as possible. And so if you can just like and subscribe, that's all I'd ask for me showing you this. So yeah, thanks guys, and I'll see you in the next video.